In 2025, the world's two biggest economies, the United States and China, are once again locked in a high-stakes battle. Not with missiles or troops, but with tariffs, trade bans, and economic power plays. What started years ago as a dispute over imports has now escalated into a full-blown economic war, sending shockwaves through global markets and everyday households. But how did we get here? Why is this happening now? And who stands to gain or lose the most? This is the story of the US-China trade war in 2025, how it began, where it stands today, and why the entire world should be paying close attention. How it all started. The US-China trade war didn't begin in 2025, it reignited. Tensions first erupted in 2018 under President Donald Trump, who imposed tariffs on billions of dollars worth of Chinese goods. Citing unfair trade practices, intellectual property theft, and the massive US trade deficit with China, China retaliated with its own tariffs. While there was a temporary truce in 2020, hostilities quietly simmered in the background, waiting for a trigger. When it started again in 2025, that trigger came in early 2025, when the Trump administration back in office declared that China had failed to meet its commitments under the Phase 1 trade deal. Accusing Beijing of manipulating its currency and subsidizing key industries, the US dramatically raised tariffs on Chinese imports to 145%. Within days, China responded with a 125% tariff on US goods, targeting agriculture, energy, and tech exports. The trade war was officially back on and more intense than ever. Economic fallout begins. The impact was immediate. American consumers started feeling the squeeze as the cost of electronics, furniture, and even clothing spiked. The Tax Foundation estimated that the tariffs would cost each U.S. household roughly $1,243 in 2025. Inflation, already a lingering concern, was reignited. Meanwhile, American retailers warned of severe disruptions in supply chains ahead of the holiday season. China feels the heat too, but China wasn't immune. Despite a surprisingly strong Q1 growth of 5.4%, the Chinese economy showed signs of slowing under pressure. Foreign companies grew increasingly cautious, with some reducing investments or shifting manufacturing to Southeast Asia. Chinese tech giants faced increased scrutiny abroad, while key U.S. partners like Boeing saw Chinese airlines return aircraft, sending shockwaves through the aerospace sector. Corporate and market disruptions. Wall Street reacted with volatility. Tech and manufacturing stocks took a hit as investors feared prolonged instability. Boeing, Apple, and major automakers saw their share prices drop. Meanwhile, Washington floated the idea of delisting hundreds of Chinese companies from U.S. stock exchanges, a move seen as a dramatic escalation in the economic Cold War. Geopolitical ramifications. China warned other nations not to side with the U.S., threatening countermeasures against countries that appease Washington. This rhetoric stirred concerns in Europe and Asia, where countries depend heavily on both Chinese and American markets. Some nations began exploring new regional trade alliances, attempting to minimize exposure to the fallout of the US-China clash. Who stands to gain the most? In the short term, no one is winning. Both the US and China are suffering economic setbacks. However, there are indirect beneficiaries. Countries like Vietnam, Mexico, and India are seeing increased investment as companies seek alternatives to Chinese and American suppliers. These emerging economies are positioning themselves as neutral trade hubs, offering low-cost manufacturing and friendlier trade policies. The bigger picture. The trade war is more than just tariffs, it's a battle for global economic dominance. The US wants to curb China's influence in technology and industry. China, on the other hand, is aiming to become self-reliant and reduce its dependence on Western economies. Both nations are willing to bear short-term losses to win long-term strategic control over key sectors like AI, semiconductors, and green energy. What happens next? Analysts warned that unless both sides return to the negotiating table soon, a prolonged trade war could tip the global economy into recession. Yet neither the US nor China is showing signs of backing down. With rising nationalism, political stakes, and global influence on the line, the world is watching closely, hoping this war doesn't turn into something even more destructive. Final thoughts. The US-China trade war in 2025 is a clash of giants with global consequences. It started as a fight over tariffs, but has become a symbol of a shifting world order. As prices rise, companies pivot and alliances shift, one thing is clear: this isn't just a trade war. It's an economic chess game that could redefine the future of global power.